Hello, good morning, everyone. This is Yanko speaking. Thank you for joining me today. I hope you can all hear me. I'll share my screen in a minute or two. Um, so, as usual, before I start with today's new strategy, I would like to review some of the current charts in the market, and show you some interesting things. Of course, as always, if you have any questions, if you have any remarks, if you want to ask something regarding specific currency pairs, or if you have anything interesting that you want to share with the rest of the attendees here, I'll be happy to share it or to answer your questions. So don't hesitate to write down your questions at any time during the webinar. I'll share my screen and we'll start immediately. If you have any problem viewing my screen or hearing me properly, just let me know. As always, I'm happy to see you guys here. And let's start. You know what? I want to start with the Aussie dollar, which has been, going up considerably in the last few months. And last week, you see here that the currency pair has been moving pretty neatly in this rising or ascending channel. Let me just remove this. And somewhere around here, it tried to breach, and then tried to breach. It breached the channel and even stayed above it, but then started showing some weakness signals, and you can see here even that there was a divergence. Okay, let's you can see here that the price is going up, that these peaks are going up, but the stochastic shows weakness, and indeed the pair dropped. What's more interesting is that on the weekly chart, okay, on the weekly chart, let me just remove all these. You can see that on the weekly chart, last week it formed this this dodgy candle, okay, which stopped, or which was formed also on the 76.8 or the 76.4 or 78.6 of the Fibonacci level. Okay, it stopped exactly at this level, which, as I mentioned many times before, is a very strong level. And so it's both a strong Fibonacci level and reversal candle, and on the daily chart the divergence, a bearish divergence, and you can see that currently the Aussie dollar dropped around 120 pips, and I'm expecting it to drop a little bit more, maybe even all the way to the 61.8, which is around 100 pips more. If we look at the daily chart, we can see that the very near or close support level is around here. Okay, we have here resistance, we have here support, and maybe, okay, potentially the currency pair may even stop here and not reach all the way down to the 61.8, or we have other potential targets if it keeps dropping, like you can see here. Okay, you have this trend line. So either it stops around here on this support level, or it drops to the 61.8. If it stops on this support level, it may, and you can see here that on the daily chart, the stochastic is already in an oversold area. Okay, so maybe the currency pair will find support here, and then start going up. And if it does start going up from this level around 104.40, there are two options. Either it continues going up and breaches previous resistance, or it goes up, let's say around 100 pips towards here, and then okay, at this previous resistance around here, it drops again and maybe forms head and shoulders pattern. Okay, and then if it forms head and shoulders pattern, then again, technically and potentially, the target is 175 pips from the neckline downwards, which is around here. So maybe even it'll drop all the way to the 250. Maybe it will drop only here. Okay, again, like always, I'm not a prophet. I can't tell you exactly how it will react. These are only guesses, but as when we see the reaction, and once we see how the Aussie dollar reacts to this level, if it breaks and closes below it, even on the 4-hour chart, okay, you can see here there's a very strong support here. If it reacts, I guess it will react somehow to this level. For those of you who are more aggressive, you may try to wait and see how the 4-hour chart closes here, or the hourly chart, and try to look for long here because of this price action, because of the strong level here, with the stop not very far below. Okay, again, I would prefer waiting for the hourly chart at least to show me some reaction to this line, to this level. Okay, with maybe a divergence or some sort of reversal candle. Okay, so potentially there's there's a potential move here for long on the Aussie dollar. If not, it may drop all the way down here, and here I guess there will be a stronger support on the 61.8 plus the ascending trend line. Okay, so that's the Aussie dollar for now, and you can see the nice move from just this reverse, the 61.8, sorry, the 76.4 plus this reversal candle, and bearish divergence on the daily chart. So this is regarding the Aussie dollar. I spoke to you 2 days ago about the pound Kiwi. Okay, we spoke about these bullish divergences. So it keeps moving up, and the thing is, the interesting thing is that it seems that it closed above this. Well, maybe it can be either a weekly line or a daily trend line. But if it's a daily trend line, it looks like it closed above this daily trend line yesterday. Okay, on the daily chart you can see it better. It closed above this ascending trend line, more or less. I mean, it's really, it's it can be a few pips here or there. I mean, higher or lower. On the weekly chart, it will be more interesting to see whether it does close above this trend line. But again, we have a very strong bullish divergence, so we may very well see this currency pair moving up some more. And I guess the first target, I mean, if we stretch this Fibonacci level, then it reached the 61.8, and if it closes above the 61.8, I guess the first level is around the 76.4, and maybe even here all the way up to the 100 level, because we have to remember that the larger move is a very big move. It's about 2,000 pips, and the correction there, okay, the retracement there to the first significant retracement level is about is to the 38.2, which is a previous support or resistance level, and for there we have about 270 pips or 280 pips more. Okay, so it's interesting. It can be interesting to see how the pair reacts to this trend line, and I think there is still a good chance of this pair to move up. And you can see that if I stretch this trend line, then it closed above it. Okay, it breached also this descending trend line, meaning, and it's only, you know, it's a fresh descending line, trend line. It reached it for the first time yesterday, and still it breached it pretty easily. So I guess there's still a good potential for the pair to continue moving up. Again, I remind you, there's a very strong divergence here on the weekly chart, and after such a strong move downwards, some retracement is expected. So again, we'll continue following this currency pair. The yen, the dollar yen, I just we spoke about it, and I mentioned how it's been ranging and moving sideways, and it looks like finally this pair is, and I'll stretch this. Let's see. That's not what I wanted to. Yeah, it's something like that, I guess. It's more or less okay. For some reason, with the demo, yeah, okay, I'll stretch it more or less like this. This is the channel that in which the currency pair has been ranging, more or less. Okay, here we can see here. You can see here all the boundaries of the channel. Okay, and now it looks like finally the dollar yen reached this channel, and you see here it found nice support, and it continues moving up. Okay, on the daily chart, I mentioned 2 days ago this here. Okay, I mentioned this double bottom on the daily chart, on the hourly or 4-hour chart. Okay, and you can see this reversal candle. So that was 2 days ago. I entered a trade here, right at the bottom of the channel and the support area. Okay, just because I saw a potential for price action with the double bottom, and my trade is still open, and I'm waiting for the currency pair to potentially, okay, reach. Well, let's see here. So first of all, you can see also that it breached this trend line too. Okay, and this trend line gave nice support here, and I think the potential, well, potentially with this with the dollar yen, the targets, okay, for the upward move is around 78, 79, 80, or even 80, more or less. Okay, 79.90. I think the 76.8 is also around here. Yeah, you can see it around here too. The 76.8 of the 76.4, sorry, of the Fibonacci level, and you can see here this very strong resistance level. Okay, you can see here all these candle wicks with very strong supply around this level of 79.80, 79.90, or around the 80 round number, which is also a psychological level. So I guess this is the first target. Okay, it's about 90 pips. It's not, for the dollar yen, it may take maybe even a couple of days, I don't know. But again, after breaching finally this ranging, okay, or sideways area, we may see the dollar yen gaining more strength and eventually pushing upwards all the way to this resistance area, okay, this resistance level. So there's a good potential here for an upward move. And with the dollar yen going up, I guess other currency pairs, other yens may also go up too. For example, the pound yen, the euro yen, I mentioned it again 2 days ago regarding the divergence we saw here. Okay, On the weekly chart, we talked about the divergence here, I think. Yeah, okay, so there was a divergence at lower lows, higher lows here. The pound yen also is moving upwards, and it's now struggling to breach. Where is the pound yen here? Here it is. Okay, the pound yen here is in a way struggling to breach this trend line now. Okay, but once it closes above this trend line, if it manages to close above this trend line, we may very well see the pound yen moving up even more with potential move all the way up to this area around here. And we have here both resistance from, static resistance from previous highs and this trend line. This is around 125.50, more or less. Okay, so it's, let's say once it closes above this trend line, it may be 140, 150 pips more. This is, I guess, the first target of the pound yen. Okay, so just be aware of these levels and these currency pairs. It's interesting to see, to plan your trade and see it work. Okay. This is it for now. Maybe before the end of this session, we'll analyze a few more charts, or if you have any currency pairs or charts you wish to analyze, let me know, and we'll make time for that at the end of this session. Okay. Let's just close a few of them. Today's strategy is called, the template is called ASC trend. Okay, ascending trend or whatever, it doesn't matter, ASC trend. And I changed the template a little bit. Okay, there is a template with many indicators. I changed it a little bit and removed some of the indicators and made the chart a little bit more visible or easy to view. This strategy works on hourly charts or higher. Okay, 1 hour, 4 hours, or daily charts. And it has several indicators. With the main indicator, this indicator, okay, with the arrows and the colored lines that go above the candles. Okay, it's called the ASC trend 1, and the ASC trend signal. It gives a signal. I'll elaborate on that in a few minutes. And it has 3 indicators: the CCI, the RSI, and the stochastic. The nice thing about this indicator or the system is that it basically goes with the trend. Okay, but it has some drawbacks. One of the drawbacks is that these arrows, these signals, tend to repaint. Okay, they tend to appear and disappear and reappear, and so you'll have to, if you want to use this system, you'll have to first monitor it and work on a demo account or even on your real account, but without trading, just monitoring it and viewing the signals as they form, because again they tend to appear and disappear. Another drawback is that basically the system requires that you stay in front of the chart. Okay, you can't, it's not a system for pending orders. It's not a system for to come and view, to watch it once an hour. Basically, it's something you have to stay in front of the chart and watch the signals, because again they may change, and because sometimes, especially within the Bollinger Bands, you may see some reaction to the Bollinger Band, especially when it's narrow, and you'll have to close the trade on the other side of the Bollinger Band. I'll talk about it in a minute, and then again you have to react on time and not wait for for the next candle or whatever. So let's talk a little bit about how the system works when it the signals, how it gives the buy and sell signals, and how to use all the indicators of the system. As always, if any of you wants to get this chart, the system or these indicators, you can always send me an email requesting for the ASC trend system. Okay, send me an email to yanko.fx@gmail.com, and I'll send you a zip file with the indicators, with a template, and with the explanation file. Okay, with the trading rules for this system. Okay. So let's start. The rules are as follows, and we'll review them one by one. And again, it's the rules of the one who created the system, and you may always try to change them a little bit and see if other rules work better for you, and if you feel more comfortable with these rules. But these rules are his rules are quite strict, okay, and he says that they've been working very well for him. And so the first rule for him is to use a 30 pip stop loss. Okay, he says use a 30 pip stop loss. For you, if 30 pips, if you trade currency pairs which are a bit more volatile, you may try to use a larger stop loss. If you think, or if you enter after a candle that has a longer wick, okay, although 30 pips for 1 hour are pretty okay, but if you think that 30 pips are not enough, if you think that you want to use a larger stop loss with a smaller trade, you are welcome to do that. Be flexible, be dynamic. But basically the stop loss is 30 pips. For an hourly chart, it's pretty okay. If you use higher time frames, you may want to extend your stop loss even to maybe 50 pips or above. And again, it depends also on the currency pair and on the chart itself. If you enter in a place where the candles are quite small, maybe 30 pips are enough. If you have longer wicks, you may want to use larger stop losses. So for long position, the rules to enter a long position are as follows. We have here two moving averages, the 5 EMA. Okay, we have the 5 EMA on close, applied to close, and the 10 EMA. And if you want for long, the first signal is for the 5 EMA to be above the 10 EMA. Okay, obviously. So the yellow crosses above the blue EMA. 5 is above 10. RSI, okay, and CCI and stochastic, we have 3 indicators. So the RSI is above 50. Okay, RSI above 50. CCI above 0 and pointing up. Okay, CCI above 0 and pointing up. And the stochastic is also going up. Okay, stochastic is also going up. Just a second, please. excuse me. So the CCI pointing up above 0, the RSI pointing up above 50, and the stochastic is also going up, you know, with the yellow or the stochastic line itself above its moving average. Okay, it doesn't have to be above 50, just pointing up. You know, the stochastic is much faster. The parameters of these indicators are, by the way, the CCI 14, RSI 14, and stochastic 533. Okay, so basically more or less the default values. Okay, these are the main indications, and of course we have the these arrows, and the strongest signals are when we have an arrow, a blue arrow pointing up. Okay, and you can see that along with the arrows come these blue or purple lines. Okay, light blue. So you can see here this light blue line, as long as the trend is potentially up. Okay, and the purple lines go on top of the candles when the trend is potentially down. Okay, now so again, for you, the strongest signals are when you have all the indicators in agreement and the arrows also point to the same direction with the same color on top of the candles. So for example, for a long trend or a long trade, okay, a buy trade, you want to see the 5 moving average above the 10 EMA. You want to see, of course, bullish candles colored or marked with a blue line. You want to see the CCI above 0, the RSI above 50, and the stochastic lines also going up, okay, the yellow above the red. In this case, we, for some reason, don't have a blue arrow here, okay, which means it's a little weaker signal here, but still you can see that the trend is a pretty nice trend. Okay, so I guess even entering around here gives you a very nice trend, very nice and very profitable trade. And we'll see a few more examples, but take into account again the fact that sometimes the signal, the arrow, okay, you may see a blue arrow go into the trade, and then if the candle goes down, the blue arrow will disappear. For example, in the previous hour, okay, this candle here, you see here, there was a rising candle here, and this candle here started going up. It was white. Okay, it started going up, and the blue arrow appeared, and when it started going down and up and down and up, the arrow appeared and disappeared. Eventually the candle went down, the arrow disappeared, and it was a bearish candle. So if you enter long, okay, if you have all the indicators showing you an indication to go long, and eventually the signal disappeared and you see that the indicators don't give you the signal anymore, just close the trade, okay, with a small loss. It's nothing here. It's less, you know, it's 10 pips or even less if you closed it earlier. I don't remember if the RSI was still above 50. I think it was above 50 around here when the candle started going up, and the stochastic may have been also going up. Okay, so potentially all the signals, including maybe the moving averages, showed a buy signal. However, you can see here that the moving averages are in some sort of a convergence. The Bollinger Band is also converging and tightening. So if you take a trade here, just be aware of excuse me, of these signals, for example, tightening Bollinger and converging EMAs that may show hesitation or area of sideways movement rather than potential trend. Okay. The creator of the system says that when you see the signals line up, okay, when you have a blue arrow and a blue line on top of the candle, and the CCI is above 0, and the RSI is above 50, and the stochastic is going up, if you have all these signals, don't wait for the candle to close. Just enter. Okay, just take the trade with a stop loss of 30 pips, and if you see that it goes the other way around, then just exit it. Okay, but basically if you see the signals appearing, just enter the trade. Many times the trade or the trend will continue. So this is for long. Obviously, for short, the signals are the opposite or the other way around, meaning 5 EMA crossing below the 10 EMA, the CCI below 0 and pointing down, the RSI below 50, and the stochastic lines are going down, the yellow below the red. And then of course on the chart itself you want to see the red arrow and the purple line on top of the candle, a descending candle, a bearish candle. Okay, if you have all these lining up together, you may get a good signal or a good trade, a good short trade in this case. What about the exit rules? Okay, the exit rules are also very clear, and there are 3 potential exits here on this with this trading strategy. The first exit rule is if the EMAs cross to the other direction, meaning let's say you entered long, you entered short, and the EMAs crossed, the 5 EMA crossed above the 10 EMA, you exit the trade. Usually, okay, because I mean, if you see these crosses, probably it will happen either with a very strong candle or after a long sideways movement. Okay, for example, but again, it will probably be the last signal because the EMAs are the slowest, so you may see other signals first. For example, let's say you entered here, you entered short, and you decided to stay in the trade. I don't know what, and there was a long sideways movement here. Here the EMAs, maybe you thought it would reach here and continue going downwards, and you remained in the trade, but the EMAs crossed upwards. You close the trade. You do not remain in the short trade if you see this situation. Another exit rule is when the price bounces from the Bollinger Bands. Okay, for example, you entered a short trade. Let's say you entered short here. Okay, it started going down. You got the signal around here. You got the red arrow, the CCI maybe crossed down, and the RSI and the stochastic, and you decided to enter a short during the candle. Okay, as the candle was forming, you decided to enter short here. Okay, and around the Bollinger Band here, it gave you, maybe it started bouncing, and you can see here that the Bollinger Band is narrowing, so it may, it just as well may have entered a ranging area with a tightening Bollinger Band, just like here, a flat Bollinger Band. In these flat situations, usually the price bounces back and forth from the Bollinger Band boundaries. Okay, so again, maybe the price would could bounce from here all the way up. So if you entered here and you see that the price reacts to the Bollinger Band, just close the trade. You can see the same thing here. Let's say you entered long and it reached the other side of the Bollinger Band, which is quite flat, and it starts bouncing or going backwards or going against you. Just close the trade. even if it continues, okay, you took whatever you took. You don't want to turn a profitable trade to a losing trade. Okay. And the third rule is to close when the stochastic lines converge. Okay, for example, you can see here, let's say you entered long here and you have this trade and this one starts going downwards, and you see that the stochastic lines converge here or here, for example. That's a nice convergence. Okay, you can see how the stochastic lines already around here start converging. So let's say you entered long here. Okay, although according to the stochastic it's already in an overbought zone and the lines converge, but let's say you decided to enter here and you see that the stochastic lines start going down around here, maybe around, yeah, you know what, probably according to the rules of this trade I would probably exit around here or wait no more than here. Okay, around you can see that it started probably bouncing. It's hard to see here. Let's see the high, 123.69. Yeah, so it kind of bounced from the Bollinger, and the RSI is already going down, and this is a hesitation candle. I would probably exit. Even if I entered the trade around here, I would probably exit around here. I wouldn't stay in the trade, although it eventually gave another 15 or 20 pips up. Okay, it gave another push, but it might as well just drop here. It could have dropped here. So according to the rules, I would just close my trade here. So these are the three exit rules. Either the moving averages converge or change direction, okay, cross each other to the opposite direction, or the price bounces back from the Bollinger Bands, or the stochastic lines converge. Okay, of course you should also pay attention if you trade. When you trade, pay attention to divergences. Okay, and here you have three indicators that show potential divergences. For example, here you can see how these highs go up. Okay, the peaks here go up, but the CCI is going down. The RSI is also going down slightly. Okay, not too much. Well, and the stochastic is since it's a fast indicator and these peaks are pretty far away, stochastic doesn't really show divergence here. Okay, the stochastic shows divergences between closer peaks because it's a fast indicator. Okay, 5. So be aware of these divergences. For example, let's here also you can see that the price is going down here. Let's say you're in a downtrend, but the CCI is already pointing up, and the stochastic is pointing up. The RSI is not giving much of a divergence, maybe just a little bit between these two candles, just a very small divergence here. Okay, so be aware of the divergences. They can, of course, alert you with regards to weakening trend. Okay, let's look at a few more examples. You can see here the arrow shows you potential beginning of a trend, but obviously you don't enter here because the yellow moving average is below the blue moving average, and you can see that the RSI is still below 50, and the stochastic lines around here are also not, I mean, they're not clearly going upwards, but once once this candle closes above the, or starts forming an uptrend and the moving averages, I would say, yeah, when this candle closes and this candle opens, we can clearly see that the yellow moving average is going above the blue moving average. The CCI is pointing upwards. The RSI is starting to go above 50 around here, potentially, yeah. And the RSI and the stochastic is going upwards. So around here or around here, you may take a the long trade. Okay, a long position. Here within 3-4 hours, it gives you 90 pips, which is very nice. One thing I didn't mention, the original template, by the way, also has a parabolic SAR, and it has another indicator with some points. Again, I removed a little bit because it was already too much on the chart. It's already now looks a bit too much, but it was even worse. And yeah, but one indicator I left here is the ASC trend 2. Okay, the first one is this one with the arrows and the lines. The ASC trend 1, this is the signal, and the ASC trend 2, it looks like, you know, like a stop and reverse, like a SAR, like a parabolic SAR or something like that. It may confuse it. Okay, it may confuse you a little bit. For example, here you want to enter long, and you see that this one is that the ASC trend 2 is still purple, but on the other hand, you can see that the candle closes above it, and then okay, it gives you maybe once you see that the trend or the candles are above the purple ones, and all the rest, all the indicators, the rest of the indicators show you an uptrend, then you can feel safer to take an uptrend. Okay, and as long as the price is above the blue line, the blue dots, then again, it may give you more confidence in remaining in the trend. Okay, here, for example, you have a downtrend still above the blue dots. Okay, this indicator is a lagging indicator. So if you don't feel comfortable with it, just delete it. Okay, just remove it. And again, you have enough indicators here. Sometimes too much may make you refrain from trading. So if you don't feel comfortable with these with too many indicators, just remove whatever you don't feel comfortable with. If you have any questions so far, or if you want to point anything or say anything, please feel free to write it down. Let's see a few more examples. I'll read some of the other rules written in his trading rules files. Okay, some other interesting and important rules, general rules that I think you should take into account. But before that, I'll maybe just take another one or two more examples. Be aware of, by the way, of the Bollinger Bands. Okay, when they're narrow, when they're tight, it's preferable not to trade within the range. If the candles are small and everything is flat, just wait for the trend to evolve, for some trend to evolve, because again, signals may be very short. Okay, you may enter a trade, and you know, it can reverse to the other side even before you close even the spread. Okay, even before you cover the spread, if it's a very tight range. So be aware of it. On the other hand, obviously, when there's a tight range on the Bollinger Band, eventually it will breach or break the range. So wait for the proper hours to start trading. You can see here reverse signals one after the other within the tight range. But when you do start seeing a decisive candle breaking or breaching the range, okay, and the rest of the indicators also give you an indication. For example, here we have this bearish candle, this decisive bearish candle. The moving averages are already in a nice angle and separation, and of course order. Okay, the yellow below the blue, and this candle closes below the Bollinger Band. and the CCI is below 0. It's even below minus 100. The RSI is below 50. The stochastic is going down. So here, and it's noon already. Okay, so it's past the ranging hours of the middle of the night. Here, it's a good time to start trading or take the signal. While here, as long as you don't see a decisive candle or a candle that that agrees with the rest of the indicators, okay, and in this case, for example, you can see that the CCI, these ones are going down, but the CCI is pointing upwards. Okay, the RSI is pointing upwards. The stochastic is pointing upwards a little bit. So if you don't have all the signals lining up together and showing you a strong agreement, just wait. Okay, just wait for a better signal, even if you miss, okay, 20 pips. Okay, but it's better than entering here and eventually the price goes against you and you close in a small or a big loss. Okay, so just wait. Sometimes it's better to take part of the trend or part of the move, but in a safe way than try to take the move from the beginning, but in a less safe way. Okay. There's a question here. If you are to take a long, okay, if I am to take a long and immediate up there was a reversal signal from Fibonacci. There can be reversal or continuation. You get stuck many times with this and you lose. Okay, so I didn't talk about Fibonacci levels here. I didn't talk about the pivot lines here. Obviously, you can add all these. Again, basically this system tells you to, when you see all the indicators line up in agreement, okay? I'm not saying take long here immediately because the indicators are not in agreement and it's a tight range, and the moving averages obviously are not in agreement. Wait for all the indicators to be in agreement, and then yes, if you get a signal and everything is in agreement, then take the trade. Okay, maybe you may lose if the trade reverses immediately. Okay, if the market reverses after you entered. First of all, we have a stop loss of 30 pips. So enter or open your position in such a size or such a lot size that you feel comfortable with. Okay, so even if the stop loss is reached, is taken, is filled, you still don't lose too much. Okay, you still feel comfortable as much as feeling comfortable is possible with losing. But yeah, if all the indicators are in agreement and they line up, enter the trade. Of course, if you see, if you analyze the charts and you see that you're exactly on a Fibonacci level, and you think that this Fibonacci level will stop the price from moving upwards or downwards, then don't enter. Then wait. If you feel that something else that is not part of the system may give another signal, then wait. But there are so many indicators and signals and resistance and support levels and Fibonacci and moving averages. Sometimes I have this problem that I overanalyze the chart and I see so many conflicting or contradicting signals that eventually I don't enter the trade. But I learned that sometimes you have to enter it. If you have to take the trade. If you have enough signals or indicators in agreement, just take the trade, unless you really think that this point is, or the resistance level is super strong and it's better to wait. Okay, but it's never ending. There are so many support and resistance areas that if you say, okay, here there's support, here there's resistance, here's Fibonacci, here's moving average, there's a trend here, trend line, a moving or pivot line, it never ends. Okay, so you have to stick to one system and go with it. It doesn't matter if it's this system or maybe or this system or I don't know, or just a naked chart with price action and whatever, or moving averages, or you wish to use this system. Okay, remember it's you know, and every time frame may show you something else, something different. So eventually you have to stick to one system and go with it. Okay, everything will, as long as you have the discipline and you have the right money management or risk management rules, many trading systems will eventually be profitable. Okay, I'm not talking about you have to test it, of course, you have to know how to use it. But all these systems, all these indicators are eventually just indicators. They just help you. They just help you feel more comfortable to enter the trade. Because otherwise, you know, we have so many reasons to hesitate and to fear from losing that we can, you know, keep staring at the charts without doing anything. These systems, their main goal is to help you decide, to help you feel comfortable or feel confident and enter the trade and make this move of entering the trade. That's the main reason or the main purpose of all systems, to help you decide, to help you make the decision, to help you open the trade. And of course later on manage it or close it. So, and I'm sure some systems contradict each other. One will tell you go long, while one will tell you to go short, or one will tell you to wait. Okay, there's never one correct system. But eventually the correct thing to do is to take the trade and manage it properly. And if I read out a few more of the rules that this guy wrote, some interesting rules. He says, well, I won't read all of them, but some of them, okay? He said some of the important ones. So, okay, and he says never trade without a stop loss, trade only 1 hour charts or higher with this system. He says no limit orders. Okay, you can see here that you have to wait for the signals to line up. You can't put something and you know, in advance. He says never leave a trade unattended. Close the trade before you leave unless your broker software has trailing stops. Then stop trailing stop. Then set trailing stop for 20 pips. Okay, that's already when you have a profitable trade and you want to leave the computer. Just set a trailing stop. And he says never set take profit. Okay, always close the trade when it's ready to close. You know, with the take profit, I sometimes do set take profit because sometimes I know that the price, you know, for me sometimes it's enough to take whatever I think is enough, and I don't want to keep monitoring the trade. But again, you may, for example, here in this trade, let's say you set a take profit around here, okay, and you say, okay, 30 pips are enough for me, or 20 pips. And you see here that eventually drops another 60 pips or 70 pips. So setting a take profit around here may, you know, may give you nice profit, but eventually continue a lot more without you. So when you have a strong trade, you may wish to set a trailing stop or just monitor the trade rather than close it too early. He also says close the trade immediately if you see a signal for the opposite direction. Okay? Eliminate all emotion, greed, hope, and assumption. And assumption, I think eliminating assumptions is, of course, eliminating greed, hope, and emotion are important, but even if you eliminate your emotion, you may assume things. You may assume that the price will reach this this price, or this this target, or this target, or that target. So and then you say, okay, I'm just assuming. I'm not emotional, I'm not greedy, I'm not hopeful, I'm just assuming. And it sounds very very, I would say, objective, or very emotionless. But assumptions are eventually are some sort of a hope or greed. I can tell you that yesterday I saw a partner of mine trading. He opened long trades on the euro dollar, big trades, and the euro dollar went up, and the trades within minutes made profits of thousands of dollars. But I guess he was either hoping. I didn't ask him. I didn't want to interfere with his trade, but I was assuming he was either hoping or assuming, that the euro dollar would continue going up, and it didn't. Okay, I think it was around here. He left the trades open, and I saw these divergences, but I wasn't sure they would eventually turn the euro dollar downwards, and I didn't want to say anything, because previous times when I told him, listen, there's divergence, and be aware, be careful, he closed the trade, and then when it kept moving upwards, he said, okay, he blamed me for making him close the trade too early. So I decided not to say anything, and that's a good advice for you also, not to advise anyone and not to take advice from anyone, because eventually, all the road to hell is paved with good intentions. So I didn't say anything. He left the trades open. He was sure that it would continue going up, and now these trades are still open, and with losing thousands of dollars for no reason. He could have taken a profit of thousands of dollars here, and he was expecting, I guess, much more. He was either greedy or hopeful or just assuming. Okay, so eliminate emotion, greed, hope, and assumption. If the trade is giving you something and it going against you again, don't turn a profitable trade to a losing trade. He also says never trade against the trend. Again, with this system. With other systems or divergences, I showed you it's possible and sometimes can be profitable. Okay, he says when you see an imminent signal coming and you want to take the call, have your order ready and keep your eyes on the chart so you can enter your order the second the signal appears. And again, I told you the signal may appear and then disappear. Just be aware of it, okay? But if all indicators are in agreement and line up, then take the trade. You can never know how it will evolve. Never chase the price. Always allow the price to come back to you. That's a good advice. And never move a stop loss while the trade is still negative. Okay? So if the trade is still negative and you have your initial stop loss, just leave it there. Just leave it there. And you may move the stop loss to break even when your profit is at least 30 pips and more. That's what he says. Okay, some good advice. And that's it. I mean, this is the system. For those of you who want to get the indicators and the templates, send me an email and I'll send it to you. And other than that, that's it for this week. We'll meet again next week on Monday, and I guess on Tuesday, next Tuesday, I would like to show you some websites with systems and news and analysis, some interesting things. We'll leave it for next week. In the meantime, have good luck and good trading. And you can see here the pound yen still closed below this trend line. Okay, I wonder how if it eventually will break it. You see the pound The Aussie dollar, by the way, closed above this trend line. Let's I'll show it to you here. Actually, okay, here it closed below. The chart here is somewhat different from the chart I have on the real account. Okay, whatever. So this is it for this week, and thank you for attending. Thank you for joining me, and I'll be happy to see you again next week. Good luck, and have a good day. Bye-bye.